Fox Business Alert: Wall Street is in I sell mode after a shakeup at the top. Shares of Apple right now are retreating here by about 2% after CEO Tim Cook announced he will step down and become executive chairman effective September 1st. Cook, you may remember, took over for Apple co-founder Steve Jobs back on August 24th, 2011, after Jobs resigned due to health issues. Since Cook took the reins, he has transformed Apple into the tech titan it is today. The stock is up more than 1,900%. Now it's a guy named John Ternus's job. Apple's senior vice president of hardware and engineering will get to run the CEO show. Ternus oversees the engineering and development of nearly all of Apple's really huge devices. We're talking about the iPhone, iPad, Mac, AirPods, and other accessories. So let's bring in two analysts with two different perspectives. Joining me now, D.A. Davidson's head of technology research, Gil Luria, who has a neutral rating and a price target of $270, and Bernstein managing director and senior analyst Mark Newman, who has a price target of $340 and an outperform. All right, Mark, you're the bull here. Let me let you grab this one first. What are your thoughts on John Ternus? Were you shocked by the announcement?
No, I think it was well anticipated that there was going to be some leadership transition. It's been rumored in the press prior, and even John Ternus's name was mentioned as the senior VP of hardware engineering. So not a massive surprise. I think it's a bit of a sigh of relief that we can get behind this. And I think the transition sounds like pretty smooth. Tim Cook is not going away. He's going to be in this transition until John Ternus takes over CEO September the 1st. Plus, also after that, Tim Cook is stepping up, so to speak, to executive chairman. He's going to stay involved. So I think it's a nice, smooth transition. And I think John Ternus seems like a safe pair of hands as he's ran the most important part of the business, which is the hardware, iPhone, iPad, AirPods, etc. So to me, generally quite positive, not a huge surprise. Good to get it behind us.
Gil, you're not ready to come out swinging and say, I'm all about the outperform rating. Why?
Well, I do want to celebrate Tim Cook's reign. He took all of Steve Jobs' great ideas and translated those into tremendous financial success for Apple and created tremendous wealth for their shareholders. Having said that, when a CEO retires after 15 years on their own terms, it's usually because it's at the top. CEOs don't like to leave during crisis. They like to leave when they get a choice, when the company's doing really, really well. So the stock's up a lot. We're in the midst of a big iPhone upgrade cycle, but there's always the other side of that, which is to say, Mr. Ternus is now taking over a company that's at its peak. And so if they don't generate a lot of innovation between now and the end of the year, we're looking at a possibility of a decline in revenue at some point by the end of this year, beginning of next year. This is the biggest iPhone upgrade cycle in 5 years. Last time we had an iPhone upgrade cycle this big was 2021 when we had the iPhone 12. We had tremendous growth, but then the very next year, iPhone sales declined. We have a big upgrade cycle now. If they don't have a lot of innovation between now and the end of the year, we may actually be looking at declining iPhone next year.
Well, to that point, Mark, you got to tell me, what about the AI piece of this? Because Apple has certainly missed that boat, and they missed a deadline for the refurbishing of Siri. Siri's horrible. Can I just say that? Oh, my God. I'm sorry. I'm sorry. And I really like my Apple products. I really do. But Siri, not so much.
Be careful saying that, though, because it could wake up your devices.
Oh, well, that makes me even more annoyed. But, Mark, what about that? I mean, Apple has basically turned to Google to say, we'll use Gemini to fix this situation. And it's sort of like, OK, throwing in the white flag or saying, let's go with people who really can do this better. That said, he's a hardware guy. Does anything about that concern you?
Yeah, sure. So, I mean, first of all, I disagree with what Gil was saying about this at the top. I think Tim Cook is handing off because this is at this time because he feels this is the right time to start a longer-term leadership transition, not because he sees this as the peak. I think there's a long way to go for the company, and I think AI is part of that. So, with the question, with respect to your question, yeah, I mean they clearly are late. I mean, there's no way around that. They're 2 years plus late on many of the promises in Apple Intelligence. They would admit that. They have admitted this publicly, and they have also said though that there will be an update to the Siri this year. We expect it will probably be at the June WDC, or at least by the September iPhone 18 release. So I think let's wait to see what they come out with. But I think there's no company better positioned on earth than Apple to monetize AI with access to 1.5 billion of the most lucrative, stickiest customers on earth. They're Apple users. They're you and me and lots of other people. And so I think that gives them the right to make money. That gives them that they could basically be the toll booth to AI services. And I think that's what they're going to do. On the partnership model they've picked, partnering with Google rather than building their own foundational model, I think it's a wise decision. Rather than spending $180 billion a year in CapEx, they're spending $14 billion a year and getting access to the latest and greatest provided by Google for cents on the dollar. I mean, they're paying what's rumored to be $1 billion a year to get access to Gemini model. And so I think this is an absolute bargain for Apple, absolute bargain for Apple shareholders. And I would be long the stock here.
I know, Gil, that your price target is $270 a share. We're just a few dollars below that. Earnings come out next week. The expectation by analysts is that we will see about $1.59 a share in profits, revenue $109.5 billion. What will you be watching out for? What's the one thing you could hear, Gil, that might change you, shift you to be a little more bullish?
So I'm not really concerned about the financial results in the next couple of quarters. Again, we're riding high on an iPhone upgrade cycle that has a lot of leverage throughout the business. And unless we're paying too much for memory, which is possible, the earnings should follow very good revenue results. What I'm more looking for is that innovation. Will Siri be that much better after Worldwide Developer Conference? Will there be a folding phone coming out at the end of this year? Because again, without that, Apple's risking having a negative growth year next year. We need a lot more innovation from them in the next 5 years than we've had in the last 5 years. That's why Mr. Ternus got the job, because we're at a point where AI is going to change how we interact with computing. If the modus operandi up until now has been graphical user interface and touch interface, we are quickly moving to a world where we're interacting through voice, and that our AI devices are aware of their context, their environment, and have a visual concern about about where we're headed. And so that lends itself to form factors that Apple is not participating in yet, and will need to participate a lot more in, like glasses, like AI Pin, better presence within spatial computing, I think they call it, not virtual reality, spatial computing. So we're going to need a lot more innovation in the next 5 years than we've had in the last 5. Otherwise, Apple, which is, by the way, the most expensive stock of all the mega caps, will have a challenge. They're trading at 30 times earnings. That's more than NVIDIA, Microsoft, Google, Meta, Amazon. And yet all the companies I just listed are growing both revenue and earnings faster right now. And without much innovation, they'll grow even more, even faster next year, while Apple doesn't necessarily have the ability to deliver on that.
Remember the good old days, Mark, when the PE ratio for Apple was 11? It wasn't that long ago. You're worried that you're paying too much here? And we got to wrap it up, but I'm really interested, because can I just say, you were very creative, Mark. Your note on this today, Apple as the world Ternus.
Yeah. Trying to be a bit creative on the title. I mean, to Gil's point on valuation, PE, but look at EV to free cash flow. It's actually the cheapest on EV to free cash flow, because they have free cash flow and they're not spending $180 billion a year on CapEx. That's the big difference. Free cash flow is the most important metric, and they are bringing in lots of free cash flow and they're returning it to shareholders.
Great to see you both. Nice discussion here. We get to see what the earnings are in about a week, so we'll watch that and so much more and see if Mr. Ternus comes out. I want to see the foldable phone. Thank you very much. Good to see you both.
Thank you very much.